Let's kick it off with your reaction first to what we've just heard from the Saudi energy minister, stopping short of commenting on the recent volatility that we've seen in oil in the aftermath of the Israel-Iran conflict, but really pivoting to the energy transition. What's the messaging strategy here?
All of the above. I think that has been the big message, frankly, of this OPEC seminar has been really focused on just transition, low carbon future, the technologies, the regulation needed to reach that end state. Very little discussion on actual OPEC policy, the role they play as a regulator, a central banker of oil. Only Minister Mazrui, who you brought up the clip from earlier yesterday, he was the only one who really took the question on OPEC, the decision, the fact that they believe the market can absorb these barrels, pointing to the muted price reaction as a sign that the market is actually tighter than many analysts believe. So again, not a lot of conversation about the market dynamics, not a lot of conversation about the war. We did have the Iranian president of OPEC come in from Tehran and give a sort of fire and brimstone like opening, but again, very focused on the sort of broader transition story.
Indeed, and it was interesting to, first of all, hear from His Excellency Suhail Mazrui talking about how the market is absorbing these additional barrels. Would you agree with that, or is OPEC walking a fine line here?
I think what the important thing is when we have this like big headline number, the reality is it is a smaller addition. Many of those headline barrels, I almost call them phantom barrels, they're already in the market. So essentially what you have is an incremental add of some Saudi barrels, some Emirati barrels, but we don't have the real V8 barrels coming in. This is a smaller addition. It is being absorbed over summer. The big debate between like analysts and the IOC heads and the ministers is what happens in the fourth quarter. You have a number of analysts out there saying we're going to be oversupplied in Q4. Then when driving season is over, that's when these non-OPEC barrels, these additional OPEC barrels, that's going to overwhelm the market. So that is the debate. Is it fine now? But what happens at the end of the year?
Indeed. So as it stands, with all that we know, are you more bullish, more bearish? Are you aligning with the OPEC view that perhaps this market does indeed need those additional barrels?
Well, the RBC house view is that this market looks like it will be amply supplied come Q4. And so to me, what the interesting questions are going to be is if that does play out, does OPEC continue with the policy? I mean, one thing that they have said, and I think what is different, I started coming to this seminar 10 years ago, is that there almost was no discussion of a break. Like market share war was like half a year in, and they believe they had turned a corner 10 years ago when they met here. Of course, we didn't. But one thing is different this time is they say it's not a market share war. They're very clear. They think the market can absorb these barrels, but they always say as well, we can pause, we can delay, we can reverse. So they do keep the break option open. So if we do get to a situation in Q4 where it does look like we are significantly oversupplied, they do have the option to pull the brake. Now, whether they will remains to be seen, but they have the option.
Let's talk about the biggest wildcard here, which in my opinion is the geopolitics. It seems like the ceasefire is holding between Israel and Iran, but in the background, we also have the US, Yemen, right?
We've had two tankers struck.
Indeed. So what does that reflect?
I mean, to me, I think the market was always wanting to look past this. It's very hard to price the risk. We've had this, Israel-Hamas war with no supply disruption. And so for many market participants, so like the missiles were flying between Israel and Iran, nothing really happened in terms of oil supply. I'm fading the story. And so there are two questions, I think. Are we really done with Israel and Iran? Like, we really don't know the extent to which Iran may have the ability to reconstitute its program. Is the U.S. and Israel, are we going to insist on zero enrichment? Like, is there a path to a deal, or are we going to see a second round of conflict there? And then the Yemen situation, like the one axis of resistance group that still retains significant firepower is now firing on ships in the Red Sea. So are we going to see an intensification of that theater in this conflict?
Exactly. So do you think the market is maybe underpricing the risk of an escalation here after what we've seen in the Red Sea?
I think they're fading the story. There's a group of the market that's like, woo, back to fundamentals. Let me think about Q4. I don't want to have to think about abstract risk in the market when it comes to supply disruption.
The other thing we're also looking at is the fact that the U.S. Senate is pushing forward this new sanctions bill on Russia, and in particular cracking down on the Russian buyers of Russian crude, China and India.
And what's so interesting about this, Dan, is if you look back to the original Iran sanctions architecture, it all started in Congress. You did not have the Obama administration seeking those sanctions. In fact, they were basically warning against them, saying you're going to drive up oil prices. But Congress was like, no, we have to take action against these Iranian nuclear activities. The same situation seems to be unfolding with Russia, that you have this sort of center of gravity in terms of opposition to Russia sitting on Capitol Hill. A number of prominent Republicans are pushing for this. That is what is really different, is that you have some of Trump's stalwart allies on Capitol Hill pushing for this very, very sort of onerous sanctions bill on Russian energy. The question is President Trump going to signal he's going to sign it? Is he going to threaten to veto it? So we're still waiting to see what the dance with the White House will be on that bill.